Good afternoon. Welcome to Accounting Beyond Figure episode. Today we'll be looking at ESG and sustainability reporting. And to do justice to this topic is Dr. Ogunsola Akintunde Emmanuel. Dr. Akintunde is a specialist in accounting, finance, audit, transaction, and information technology. He has different certificates. He's a fellow of ANA, a fellow of CITN, a fellow of Association of Certified System Accountants of USA. He belongs to other professional bodies, and he has been a public commentator on finance over the years. So Dr. Akintunde, you are welcome to this episode of Accounting Beyond Figures. And today we'll be looking at ESG and sustainability reporting. Thank you for being with us.
Yeah, it's a serious pleasure. In fact, I'm so happy to be here to speak with you on this topic and also to sensitize the public on ESG, climate financing, sustainability. This is the future of accountants, and as professionals, people need to be abreast of some of this information so that they can be up to date. Because if they are not correct, they cannot be correct. Thank you very much for that.
Thank you once again. Start from the point of understanding what sustainability is talking about, because over the years people have been talking on TV, on radio, on different forums. People have been talking about sustainability reporting, some talk about sustainability accounting, but our segment here, we are focusing on the reporting aspect of it. But how will you define the ESG, and why has it become central to modern accounting and finance?
ESG is an abbreviation, E, S, and G. And this ESG are the rudiments, they are the ingredients of sustainability reports. Sustainability reports is a company's public financial report or public disclosure of organizations' impact, risk, and also related environmental, social, and governance issues, alongside with their financial performance and also their value. And also, it also summarizes about existentiality, continuing of that organization, and also overall, organizational performance of this organization. Investors are interested, government agencies are interested, management of these companies or organizations are also interested in sustainability. We have gone past the era of just talking about profitability. If this business is not making profits, just forget about it, and let us kill the business. But now, we are not just talking about the financial data. We are also looking at the non-financial data as to your environment where you operate, as to the labor force, as to the way of life of people, how it affects that organization or that business, their beliefs, how it affects them. And also the third one is about corporate governance structure of that organization. How sustainable, what impact, what risk are they exposed to having an abysmal structure for corporate governance. So these are the issues that sustainability reporting is actually focused on.
Thank you very much. You've talked about how organization has to respond to their immediate environment. So in other words, it means it is the responsibility of every organization to respond to the environment beyond just thinking about profit. But looking at this sustainability consideration, how has it reshaped the traditional accounting?
Yes, thank you very much. The sustainability initiative of reporting, has reshaped, reporting generally, especially even financial reporting. Sustainability is not only looking at the financial aspect of reporting, it's not only looking at the figures. Sustainability is looking at the non-financial data analysis, as to how it affects existentiality, how it affects continuity of that business, how it affects their structure, and how it affects their operations. So all these are being put together, that we are not just looking at the book value of the assets. We are not looking at what is the net profit, what is the retained earnings. We have now gone beyond that, looking at the figures and having a discussion around the numbers, to having a discussion around the non-financial, the policies of the organization, the environmental impact. Climate is changing. What risk does this organization has when it comes to the climate change? And how are they working? What policies, what ideas, what technology, what strategy are they putting in place to mitigate this risk, to put them in a position that they will be sustainable for future continuing of that organization?
Thank you very much. In other words, to a layman that is not accounting inclined, but maybe happen to be, a board member of an organization that is also required to report sustainably, or someone who just want to, for knowledge sake, want to have a brief idea of what this environmental, social, governance, sustainability is all about. What can you say is the key difference between ESG and ordinary accounting reporting, traditional accounting reporting that has been there over the years in the layman's language?
Thank you very much. There are so many areas of difference between the standard financial reports and the sustainability reports. Now, for a layman, just like I laid the background, the layman believes that accounting this is total income, this is total expenses, and this is my profit, or this is my balance at the end of the day. That's the layman's understanding of accounting. But now, for a layman to also understand the sustainability aspect of accounting or reporting, now we are trying to tell the layman that, Mr. Man, please don't just look at the numbers. There are other things that affect that numbers. Example, let me give an example of the environmental aspect. Climate change. What is the impact of flood on your business, on your organization? If flood should happen now, which is a natural disaster, how does it affect your turnover? How does it affect your profit? How does it affect your operations? Definitely, we know that if this flood happens, it will affect your operations. It will affect the numbers. So you need to report. Are you assessing your environment to understand the climate risk that may affect your operations? Identify it, disclose it, measure it, and report it to the public. And this report will now tell us whether your business is sustainable or it may go down one day. Maybe when the flood comes, it just sweep your organization away, and then you forget about the numbers of total income, total expenses, and all that. So sustainability is majorly looking at other non-financial risk associated with operating your business.
Definitely, there have been framework that is guiding sustainability reporting, because as far as finance or account is concerned, there must be standard, there must be regulation, and there must be requirement. Let's look at the global framework, which one of them is International Sustainability Standards, and I believe there is Standard 1 and there is Standard 2. And then we also have a Global Reporting Initiative, right, which is the GRI,
Yeah.
So let us discuss how this framework and standard has actually assisted in the sustainability reporting, focusing on Nigerian environment.
Okay, thank you very much for that beautiful question. You see, when we talk about reporting, especially in the world of finance, reporting are guided by frameworks, legal frameworks, other frameworks that guide reporting to give it a standard. So that if you are reporting, if Mr. A and Mr. B is reporting, we should be reporting, to achieve the same final result and objective. Now, just as we have for financial reporting, international financial reporting standards, and the international public sector accounting standards, now the same way, in the same vein, we are now also having the international financial reporting standard for sustainability, IFRS S1 and IFRS S2. Now, IFRS S1 and S2, they were drawn from the GRI. They did not just come up from the blues. Now, the GRI too did not just come up. Under IFAC, the International Federation of Accountants, there's a board that was set up. The board is the International Sustainability Standards Board, just like we have for IFRS board and the IPSAS board. Now, a board was also set up by IFAC, which is the International Sustainability Standard Board, ISSB, to look at all the risk, all the disclosure requirements, all the measurements, disclosures around this sustainability, climate change, social governance activities of organizations around the world. So the board came up with the Global Reporting Initiative as a standard. We have the GRI 200, GRI 300. Now, these standards, in the same way that IFRS spell out recognition, measurement, disclosure requirements, the same way the GRI and the IFRS S1 and S2 spells out the standard for recognition of risks, recognition of social impacts, recognition of corporate governance of organization. How do you recognize them? How do you disclose them? How do you measure the impact at the end of the day? Because it is one thing for you to identify the risk. It is one thing for you to measure the risk. I remember in my PhD, we're doing risk measurement, risk and returns. That the higher the risk, the higher the return. So it is important for you to measure the risk associated with your non-financial information. So the GRI spell out these standards, and then out of that GRI, we now brought out IFRS for sustainability 1 and 2. It's still going. It's a continuing process. So the standard just helps us spell out how the reporting standard, as in the reporting format for sustainability reports. What is the format? How do you measure? How do you recognize? For example, how do you recognize climate change in financial reports? Another way is, how do you disclose corporate governance disclosure, as it relates to the value that they are adding to the organization. So all these are spelled out in the standards, and I encourage many accountants in the world to sit down and look at this GRI very well and understand it, so that when you understand what the GRI requirement is, you'll be able to you'll be able to understand what the sustainability reporting is about, and you'll be able to carry out your activities in line with that. Because sustainability report is not just something you get at the end of the year. In fact, it's not even an annual report. That's another difference. The financial report is as at 31st of December every year, one year, annually. While the sustainability reporting looks at the future. It's saying that if you don't correct this potential risk in the area of social risk, that it will affect you coming 2-3 years. So sustainability reporting is looking at the future, not necessarily looking at the past. Yes, it looks at the past figures, what you are doing to mitigate all that, but from that past analysis, data analysis of the past, is also projecting into what the future looks like for that organization, whether it will be sustainable or maybe soon to come, it will just go out of extinction.
While you were discussing the other time, you talk about climate change. You made mention of climate change, and that takes us to climate finance. How has it connected to accounting practice? How has climate change, vis-a-vis climate finance, connected to accounting practice?
Thank you very much. That also is very important. Now, before we talk about, yes, there is climate change. Everybody is aware that we are experiencing a kind of change in weather, a kind of adverse effect of the climate. When we talk about the climate, what are we even talking about? Let me even break it down. Because when we talk about climate, people think it's just the clouds. Climate is talking about weather. How does the weather affect you? Some places are so hot, some places are so cold, some places are mountainous, some places are valleys, some places are, tablelands. Like in Nigeria, we have the plateau. The weather around the plateau is different from every other weather in Nigeria. We have also the Mambila Plateau also in Taraba State. The weather around that place, the activities of the weather around there is also different. It could be raining on top of the Mambila and the rain is not falling in every other place. So we look at how all these weather activities or changes in the weather maybe before the weather used to be dry, no much rainfall. But now we are having, excess rainfall in that area. So we say, our climate has changed. Now we have more rainfall than the dry lands. So that is what the climate is about. Now, talking about climate, that's the climate change now. Now, climate financing. The fact that your climate has changed, you need to now strategize on how to protect your business, your organization, so that it will not be affected, so that this change in this weather will not affect your operation. For example, when you cited the organization, the weather was maybe a very dry land, and then you have been operating and you have been, working, carrying out your business operations without any adverse effect from the weather. And now, suddenly, you now saw that the number of months that rain falls in that place now has increased, and the level of the waterfall has now also increased. So that can affect your staff from coming to work early. The fact that rain is falling and floods are now coming, it can affect maybe where your machines are. It can come and sweep away some things. Water can spoil your equipment, it can affect your vehicle, and so many other, and it will just ground your operations. So now organizations now have to look at, okay, what do we do to protect our operations from being affected by this weather? Okay, let us make drainage so that when flood is coming, the water should just follow one particular way so that it will not come into our office. Now, the cost of doing that drainage is what we now call the climate financing. Because you are trying to spend money on a project to see that you mitigate the risk associated with that change in that weather. That is the climate financing. Or for example, you say, okay, the effect of pollution of our generator around the environment. Once we put on our generator, the smoke is disturbing everyone, we have to put on face masks. You now said, okay, why don't we go solar so that we stop emission of smoke and all that. And then you now invest money on having a solar farm. Now that cost of investing in that solar farm is your climate finance. So any money, any project, any investment that is being carried out to mitigate the risk of adverse weather condition on your organization is called climate financing. Changes in the climate, it brought about climate financing.
You've talked about, climate financing, and you've talked about the emission, which also relates to carbon right?
Yes, carbon, very important.
Yeah. Now, let's look at the challenges which organizations are facing when it comes to environmental and social performance. What are the challenges? Because now in financing, you have to take care of, maybe creating alternative
Yes.
to your climate discovery, right? Moving from, carbon to green,
Yeah.
right? So, what are the challenges you think organizations are experiencing when it comes to this performance?
All right, thank you very much. One of the challenges of mitigating the risk of the environmental impact is number one, financing. The cost of mitigating the risk is actually what is affecting so many organizations, especially in the sub-Saharan Africa, because for you to mitigate this risk, most of this financing are capital in they are capital in nature. They don't fall under operating expenses as much, So it is capital intensive, and many of them can hardly get the source of finance to this investment. So many of them go for loans. They go for borrowings. Some of them also go for equity financing, raising more funds from the market, from friends and everybody associates. So, but many of them go for loan financing, debt financing, to see that they are able to meet up, because they know also that if they don't do that capital investment into their business, it will affect the sustainability of their business. So if you are saying, I don't have money to do drainage, if this flood come now, what are we going to do? You just have to look for the money, because if you don't do it, your equipment, your goods, your services will be eroded, and it will affect profitability, it will affect existence of your business. So number one problem is finance. Another challenge that they have is technology. Trying to mitigate, climate effect on or climate risk on your operations. You also need a very good technology to also, put into place. So many of them don't have these latest technologies that they can put in place to help them. For example, the technology of electronic vehicles is another technology. Instead of having your vehicles, powered with diesel or petrol that is becoming scarce now due to even what is happening in US-Iran war, the price is going up, the cost of operations has increased. So the cost of changing your vehicles, maybe heavy-duty vehicles, now you change it to electric vehicles, or you change it to CNG that will be green or cheaper to finance. The cost of converting or getting those ones is also capital intensive. So, but the technology aspect of it, coming up with a CNG technology, I say, okay, let's use gas, connect the gas to this and that, and it converts it to green energy. So the technology behind it is also difficult for people to come up with, because different technologies are coming from different parts of the world. There's Chinese technology, there is Korean technology, there is American technology, different technology. We can also build our own locally made technology that suits our own climate and environment. So the technology framework of financing climate is also another challenge. And then thirdly is the capacity, the know-how, the technical know-how of the management and the staff on alternatives that they can actually endeavor or venture into to mitigate this climate risk or social risk. They also lack it. So many of them need to still further go on trainings on how to bring up initiatives, ideas, strategies that will help them to be sustainable in their operations. So these are some of the problems that organizations face in terms of sustainability reporting.
Thank you once again. And let's look at, we've been talking about governance, we've been talking about risk. I think you mentioned risk many times during your presentation. And we're also talking about compliance.
Yeah.
Now, in other words, it means those charged with governance must also key into the sustainability framework. How has this, how has this reporting, the ESG reporting, enhanced corporate governance and board accountability?
Oh, thank you very much. You see, the corporate governance structure is also very, very, very key to the sustainability of any organization. Now, when you talk about corporate governance structure, we talk about the board compositions, we talk about the capacity, the technical know-how of the members of the board of directors of the organization. Sometimes they serve as the drivers. Okay, maybe the management is the driver, but they are the engine that is controlling the driver to actually move the car. So if you don't have people that have technical know-how, the board structure is very, very important. The technical know-how of the board, the management structure as well is also important. Now, how does this corporate governance structure, how does it affect sustainability reporting? Now, one of the ways that it affects sustainability reporting is that the board should continually review the value of the organization, the value, not just performance. There's difference between performance and also the overall value. Now, investors and shareholders are no longer keen about profitability, financial performance. Investors are now more interested in the value of their stake in that organization. What is the value? Is it appreciating? Are they adding more value to me? Even, yes, they may be paying dividends, they may be giving me share of profit, but if the value of my stake in this organization is not increasing, then the shareholder, the stakeholders will feel, I think we need to look elsewhere because
anything can happen.
Anything can happen to this organization at any time. So because of that, the board structure, the management structure needs to continually review the value of that organization in terms of the market value, in terms of the book value, and then they take strategic decisions that will positively affect sustainability. They must come up with objectives, goals, strategies that they will use to achieve those goals in order to make them sustainable. So they are not just looking at making profit. The board is there to continue to review sustainability issues to ensure that management comply with requirements of the GRI and the sustainability reporting standards. So the structure is important, and you must have knowledgeable people as members of your board that will continue to review this performance or values that are being created. And also, in overall, the corporate governance structure should also ensure that shareholders' wealth is being maximized. Thank you very much.
Let me say, sustaining sustainability.
Yes.
We need to sustain sustainability reporting.
Yes.
Now, in sustaining sustainability reporting, then that takes us to the role of the regulators.
Good.
How are the regulators responding to the increased demand in sustainability disclosures? We have reporting, financial reporting council, for instance. We have Security and Exchange Commission, for instance. So, how has been their response, to this increased demand for sustainability disclosure?
Oh, thank you very much. That is a fantastic question. Yes, there are so many regulators. You mentioned a few of them. Yes, the major regulator is the Financial Reporting Council of Nigeria. And what is even spurring these regulators to ensure that people comply, talking about compliance, to the international standards? Just the same way Nigeria, in 2012 decided to dump its statement of accounting standards and embrace the international financial reporting standard. The same way, the regulators are also ensuring that all organizations that prepare financial reports comply with the international sustainability standards. Yes, the Financial Reporting Council, for your information, has also set a deadline for compliance of sustainability reporting. The deadline set by the Financial Reporting Council is from 2028. From January 2028, all organizations, private sector, public sector, NGOs, they must prepare sustainability reports. So it means that 2027 financial report, that is from January to December of 2027, by the time you are publishing that report in 2028, you must have sustainability report attached to it. So that is just next year. Now, for the Nigerian Exchange Group, they are another regulator. The Nigerian Exchange Group has also made it mandatory that all listed companies in Nigeria must comply with the sustainability reporting standard, and that their financial reports must also meet up with that requirement. If not, they may be, delisted from the market. So that also ensure that listed companies in Nigeria also comply with sustainability. And we have seen the finance sector, the Central Bank of Nigeria, also that is regulating the banks. They are also enforcing sustainability reporting on the banks, that the financial institutions must also ensure that they comply with the sustainability reporting requirement, and then they must give a special sustainability report aside their financial report that will be published, so that investors into this financial sector are interested in the non-financial details, the disclosure of their risk as it's is associated with environmental, social, and governance risk. So the CBN is also mandating, and I think they are going to amend the BOFIA to also, be part of the act to ensure that banks also comply. So the Securities and Exchange Commission, they are also on their own part keying in with what the Financial Reporting Council is saying, that from 2028, all traders that want to come to trade securities in Nigeria, they must present not just their financial report, they must also present a sustainability report from 2028. So, the regulators, yes, they are actually working together. There is a synergy between the regulators to ensure adoption of these sustainability standards and also compliance with what the international, that's the Global Reporting Initiative, requires from organizations.
Okay, let's we've looked at external stakeholders, which are the regulators. Now, in sustaining the sustainability and keeping to compliance, there must be other stakeholders that ensure that the reporting process is accurate, adequate, and sustainable. So we look at the internal auditor as well as the external auditor.
Very good.
Let's look at the roles of these two categories of stakeholders.
Yeah.
The role of this internal auditor as well as the role of the external auditor in ensuring compliance with sustainability reporting.
Yeah, that is very fantastic. The internal auditors, for example, they are compliance auditors. They ensure that management compliance, all legal framework, all standards of reporting, so that they are not deviating from standards. So the internal auditor should ensure that proper records are kept as to monthly reporting on sustainability, number one, monthly reporting on climate finance, monthly reporting. Now, that is why even now, the internal audit unit has been expanded. The internal audit unit has been expanded to internal audit and risk management unit. So when they are talking about that risk management in the organization, they are talking about sustainability. That is how they have brought sustainability, so that the internal auditor identify risk, potential risks that are not financial risks, like the climate risk, the social risk, the corporate governance risk. He identifies it and he reports on this risk every month. They also report on other risks, like in financial accounting. We have what they call, like in IFRS, we have impairment of assets. What usually causes impairment of assets? It is actually the drastic loss in value as a result of natural disaster. That's where climate affects value of assets. And when value of assets is affected, automatically the overall value of the organization is already affected. The financial position of the organization is affected. So it has a lot of impact, interwoven impact. So the internal auditor ensures that he discloses any potential risk that he has identified, whether social, whether governance, whether environmental. He discloses it to management, and then management needs to take some preventive or preventive actions, against those risks identified. Now, when we talk about the external auditor, I have made a recommendation. The external auditor comes to check, and don't let us forget, the role of the external auditor is to give an opinion as to, number one, the true and fair value of the organization when it comes to the numbers. And then I also made a recommendation in my thesis that the external auditor should also give an opinion as to the sustainability of the organization that they're auditing, that's the auditee. So there should be a paragraph in the auditor's report that the auditor will also express his opinion as to compliance with sustainability standards, and also their opinion as to investment, mitigation of risk, as it relates to environmental, social, and governance. As an independent and external person, you should be able to see how they are performing when it comes to sustainability reporting, environmental, social, and governance. And you should be able to give an opinion as to how they are performing, if there will be any danger in future that they are not covering. Possibly the internal auditor has been given his risk management report, and management has not done anything yet to it. The external auditor should be able to say, give his own opinion as to the sustainability, and there should be a paragraph in the auditor's report specially meant for his opinion as to sustainability reporting.
How I'm looking at sustainability, and I'm looking at the role of accountant currently and in the future. What are the new skills that you think the future accountant should possess in order to be relevant? Because today it's just sustainability, not forgetting that other areas like taxation has been taken out of accounting. So that tomorrow there won't be sustainability accountant even taken out of the traditional accounting.
Yeah.
So what are the skills that the future accountant should possess in order to be relevant in today's accounting and reporting process?
For the future.
For the future.
Thank you very much for that question. Now, I have always broken an accountant. Who is an accountant? I have always broken it down. That an accountant, first of all, when we go back to the history of accounting, an accountant is a record keeper, is a bookkeeper. He keeps records of financial activities. Now, we are talking sustainability. Sustainability is not looking at just financial activities alone. Sustainability is also looking at the non-financial activity. So, I say an accountant is a data collector. An accountant collects data. He summarizes the data. He analyzes the data, and then he interprets that data for decision making. Now, that data is not just the financial data. So, the accountants of now should have it in their minds that we are not just accountants to capture how much. We are accountants to capture all the non-financial information. And they must capture them accurately. They must capture them very well. They must summarize them very well. They must interpret it very well. For example, I always give example. How many staff do you have in your organization? You would say that this is not a financial information, but the accountant should be able to give us the number of workers in that organization. And having given us the number of workers, we know the number of departments. Various workers are working in different departments. You will say that this is work of admin, but the accountant also need this data so that they can now analyze the impact of the labor force on the overall value of that organization. So today's accountant should not close their eyes to only financial information. In any organization they find themselves, they should also go after the non-financial information. And after collecting all this non-financial information and financial information, they must summarize them, segment them, interpret them, and then present it to management in a very wonderful way for them to take decision as to climate financing, environmental risk impact, as to mitigation of risk associated with labor force, associated with corporate governance, and by doing that, they are keeping records for sustainability reporting. And when the external auditor comes, when he sits and analyzes these non-financial records presented by the accountant, he will be able to say, yes, proper record has been kept in line with the global reporting initiative, and then it means that they have done recognition, they have done measurement, and they have done disclosure. They have met up with disclosure requirements. So in doing that, the accountant collecting the non-financial information as to how many times did rain fall this month, what was the impact of our production for that day when the rain fell. These are the sustainability information that the accountants need to gather, and it will help management that will take the overall decision in it. It will guide them in taking the proper decision as to sustainability reporting.
I want us to look at the Nigeria environment, where when we talk about economic matters, we talk about the small and medium enterprise, because they take the large chunk of the economy. Now, how can these SMEs key into the sustainability framework with little complexity of costs? Because you talk about part of the challenges of sustainability to also include the financing, the cost, of mitigating risk and even reporting at the end of the day. So how can they key into sustainability? Because they too will grow, right? How can they key into it with minimal and less complex costs to be incurred?
Yes, I think that's also a very good question. Now, the SMEs or MSMEs, as they are being classified or grouped, they are very, very important to economic growth of any nation, and they must be protected as well, and they must also comply with the standard of reporting. Now, yes, there are challenges for the MSMEs in complying, but the challenges start from not keeping proper records. Now, MSMEs need to keep proper records, adequate records. Now, many of them don't have records as to, let me say, their environmental operations, environmental impacts, environmental risk. They don't keep such records. Now, it is until you keep such records, you identify. If you have not identified something as a problem, you will not know the level of importance you should attach to that thing. So the first way for MSMEs to mitigate some of the challenges is that they must keep proper records. They must have adequate records, not just financial, just like we are saying. They must also keep the non-financial. They must be able to say, okay, the rainy season usually affects our business. How many months, does rain falls? And during the rainfall, what is our profitability? They analyze that. What is the impact of rainfall? Maybe there is flood, or there is change in weather, or so many different, or maybe emission. Maybe emission also affect them, pollution affects them. They must also look at that. And then if they don't even have the finance may be a problem, but they must look at alternative to forgo so that they will not be thrown out of the business. So if you know, for example, that the cost of emission, mitigating emission, maybe there's another construction going on and the pollution from the activities is affecting your operations. Now, what do? The cost of maybe you need to build extractor that will take away the emission to another, divert the emission from your side, or you need to build up something. They can look at all the alternatives that they have and go for the cheapest one. But if they don't have all the alternatives placed on the table for them, they will just stick to only one and they say, we don't have money to do this one, so they just stay at that. So MSMEs must consult widely, they must have a forum, they must come together. At least, I think they have a forum, the Small and Medium Scale Enterprise Agency of Nigeria. At that forum, they must brainstorm, they must network to get solutions as to how they can mitigate some of the financial risk. And as well, some of them cannot be mitigated without money, let's say the truth. So MSMEs also have some level of loan financing for them that are, interest rates are, minimum. So MSMEs can also take some loans, long-term loans that they can use to finance, sustainability risk, so that it will also make them sustainable, and also, let me use your word, it will make them to sustain the sustainability.
Thank you. Finally, looking ahead, how do you see environmental, social governance, the ESG, and climate finance redefining the profession of accounting over the next decade? How do you see it?
Yeah, we are already into it. The ESG reporting and also climate financing will reshape the mentality of accountants. Just like as I mentioned, that okay, as an accountant, I'm not just only to be raising the voucher, to be asking how much is this, raising receipts, just being, strict just to financial records. As an accountant, our minds will be broadened in the future. That we are not just accountants to give report on profitability. We are accountants as to also determining the overall value addition, what value has been created, what wealth has been created for stakeholders. So we are not just reporting or keeping records as to total income, total expenses, net profit, value of the assets and liabilities, but we are also keeping records. We are keeping data, and our minds will be broadened, our exposure, our horizon will be, expanded. That we are not just accountant of figures. Thank God. The name of this group is Beyond the Figures. So accountants will no longer be looking at the figures. Accountants' eye will be looking at the non-financial data and how, especially, risk affects their business. The risk, we have different risks. There are internal risks and there are external risks. They look at internal risk from maybe labor force, their workers, their mindsets, their stake. What is the stake of the workers? How are they being managed within, so that they don't compromise, so that they don't work against the goal and objective of the organization? That's the social impact we are talking about. The accountant will also be monitoring that. Then the accountant will also look at, okay, our environment, what corporate social responsibility are we going to look at to make us environmental friendly? So accountants' mind for the future will be broadened beyond the figures, and they will look at the non-financial impacts and also the non-financial risk that affects profitability and the overall fair value of that organization.
Yeah, thank you very much, Dr. Ogunsola, for it. for having this session with us.
It's a pleasure.
We believe some other time we'll be coming up with other interesting topic for you to do justice to that.
It's a
On
pleasure.
this note, we end the episode of Accounting Beyond Figure, which talk about ESG and sustainability reporting. Please join us next time for another beautiful episode. Thank you.